If your business is making money, chances are that somebody's already told you to go ahead and do an S corporation. Truth is, most people either form an S corporation before it's too early, or really when it doesn't even make sense for them, and they go in without all the right facts, understanding the situation, and try and force feed an S corporation when it doesn't make sense and ultimately costs them in the long run. Today, I'm going to be focusing on the math and how and when an S corporation does make sense and how those savings slow down to you personally, so you can assess for yourself and have an intelligent discussion with a tax advisor about when it makes sense for you. But this video is for anyone making quote unquote side hustle income, or they have an LLC, but they're self-employed in some regard, they're getting a 1099, somebody making money outside of a day job. You business owners out there, I'm talking to you today. But before we get to that, hello, my name is Andrew D'Amico. I'm CPA partner here at Ledgerly alongside Mike Abrahamian. And here's the deal. We talk about this stuff with our clients every single day, week in, week out, month in, month out, year over year. And we talk about entity structure like an S corporation down to a client's individual picture, because we're helping them save on their taxes that they're paying to the government, their state. We're helping them build better asset protection and give them tools in the tool belt that they can utilize, push and pull, and leverage in order to save on their tax bill. If you like the sound of those things, please like and subscribe to this channel, because we're going to have future videos. The S corporation is a wide, big, broad topic. Today we're just talking about the dollar savings, but it goes well beyond that. So if you want to stay in tune and be on the lookout for those upcoming videos, please subscribe for those future videos. But let's dive right in. Okay, so right to my whiteboard, I have a few sentences up here. Like I said before, a lot of people see something on TikTok or their friends talking about an S corporation, some viral influencer is like, hey, save money with an S corporation. And they just get it locked in their head that, oh, I need an S corporation. Well, first off, run it back. Like I said, this is only going to be talking to you business owners. So if you're at a day job and you want to start an S corporation, sorry buddy, sorry pal, it's not going to work for you. Hate to break it to you. But for you business owners, when you are going to have this discussion and see if it makes sense, a lot of people get it ass backward. Not sure if I could say that on YouTube. Might cut that out. But a lot of people will start with going to somebody and saying, hey, I need an S corporation, or I want to do an S corporation, when really the mindset should come in with an open mind and be asking, hey, is an S corporation going to save me money? Does an S corporation fit my scenario? So we want to be doing this, asking these questions. That's a terrible check mark. And we do not want to just go and assume, I mean, unless if you have an extensive tax background and you know the tax code, then okay, maybe you know it'll make sense for you, or you listen to enough of our videos, or certified tax pros out there. But a lot of times, you know, you're a business owner, you're running and gunning your business, doing what you do best. That's great. Leave the tax decisions, the entity structures to a professional. So go in with an open mindset and just ask the questions, because if you start with an S corporation too early, let's say you jump the gun, you know what you're signing yourself up for? You are now going to have payroll costs, you have more compliance headaches. Think 941s for those payroll taxes, as well as withholdings, and you're also going to have an extra tax return. And I hate to break it to you, but all these things are going to cost you money to do. So if we are going to do an S corporation, we want to make sure that we will be saving more than all these guys are going to cost us. Daddy, make sense? So let's make sure we're going to get some benefit out of going down this path. And also just want to hit very quickly some common misconceptions when it comes to owner operators or LLCs and taxes in general. Misconceptions. If you've ever heard an LLC saves taxes, how many of you have ever heard that? Or even an S corporation saves taxes. Can anyone tell me what's wrong with the first one? Well, the first one is actually incorrect. An LLC, you form the LLC for asset protection. That's the point of an LLC. If you are going to start side hustling or selling things online or doing some consulting, you want some asset protection, yes, LLC is great for that, but it has no implication on taxes. An S corporation, it really should be stated as an S corporation could save you taxes. Really, when done correctly, it will save you on payroll taxes. And what do I mean by payroll? We're talking about FICA, Social Security, and Medicare. These are all kind of interchangeable. So FICA equals Social Security and Medicare. You might also hear it online, this payroll taxes. It's essentially FICA, and you might also hear it in terms called self-employment tax. Now, there's slight different nuances and situations where you're going to hear this terminology, but just for simplicity, just kind of get in your head that, hey, when we're talking FICA, I'm talking about payroll taxes, or I'm talking about self-employment taxes. These are all kind of the same thing. When you're operating your own business, that's going to be 15.3%, because at a day job, the W-2, the employer is going to be paying half of that, or sorry, on your W-2 as the employee, you're going to be paying half of that, and then the employer, the ER, is also going to be paying half of that. So, as I mentioned, when you are the business owner, you pay both sides of it because of your employer and the employee. So that is why our S corporation is going to be focusing on this tax here. How can we reduce that number? You with me so far? Knock on wood if you're with me. Shout out John Gruden. All right. So, think we got a good think we understand each other now? Yeah, maybe. Now I want to get to some quick examples so you can see tangibly how this makes sense. So let's do two scenarios. We'll do two scenarios. Let's say net profit in your business, say in the first scenario is $50,000, and then in scenario number 2, it is $150,000. For the sake of my example, let's assume you're distributing all the monies. You got that business bank account, $150,000 net at the end of the year, and you pulled it all out, you sent it to yourself personally. Great, cool, and fine. Let's just assume all monies were taken out of the business, paid to you personally. That whole concept of distributions, topic for another day, but let's assume we liquidated the whole thing personally. Let's say in scenario 1, and again, we're going to assume an S corporation was applied in both these situations. So S Corp, and the benefit of doing an S corporation is we can split our income between what's called a W-2, which I'm sure you're familiar with, and a K-1. K-1 is net pass-through that is going to avoid our self-employment tax, our FICA, which you'll see here. So let's say in the first one, we only have $50,000 in net income. So let's say we did half of that as a W-2. So the FICA we're going to pay on that is going to be 7.65%. I already did up the math. It's about $3,800. And now K1 is going to be $25,000. And now our savings, because again, over here we have no FICA on the K1, our savings is going to be about that same $3,800. Sounds pretty cool, right? That's scenario number 1. Scenario number 2, we have a higher profit, so we can justify taking a lower percentage of a W-2. So I wouldn't take $75,000 W-2 here. Maybe we do $50,000. And then that 7.65% of this guy is going to be essentially double here. So we'll call it about $7,600, and that's our self-employment tax. And now our K1 is $100,000. Again, kind of rounding here, but now based on our K1, our pass-through, that's going to avoid the self-employment tax. Again, remember 15.3% because you're both sides. So over here, we are avoiding on 100K, we are avoiding about $15,000 in taxes. Oh, Nelly, that doesn't get you excited. I don't know what will. And apologies if I misspoke before, but this $3,800 is again both sides, employer employee on that 25K. That's going to be about $3,800. These are our savings. But now let's back into what the actual net amount is. This is the saving on the payroll taxes, assuming we made an S election. But now we got to consider you're going to have to pay payroll. Depending if you do it quarterly, weekly, bi-weekly, you're going to have to get charged for running each payroll. We advise single shareholder S corporations, do it quarterly. Don't need to do more than that. And also, you're going to be paying this provider like an ADP. They're going to do the 941s, those reconciliations with federal and at the state level to reconcile the payroll taxes and the withholdings that were withheld. Those get filed quarterly, and ADP is going to issue you a W-2 on your behalf, right? So all in all, you could be looking at give or take $2,000 a year, and now you also got an extra tax return. And let's just err on the side of caution and say between maybe additional bookkeeping help and a tax return, you're going to pay another $2,000. So you ended up incurring $4,000 in costs to get a benefit of $3,800. You do the math here, so I'm actually out $200. And had you not watched this video and you went ahead and did an S Corp and you're down over kind of on this income range, didn't make sense for you this year. Just because TikTok said that you could save money with an S corporation, or your buddy, your friend, or colleague said an S Corp absolutely saved them, their situation, their numbers could be wildly different than yours. They might be in business 10 years, you might have started last year. So you need to sit down and have an intelligent conversation before you just jump into this. And now on the flip side, you take this $4,000 off $15,000, I just saved $11,000 savings. I know this is in red, but this is a good thing, people, right? So you gotta do the numbers. So those were just 2 quick examples. Hopefully that brings it home for you guys. I know we talked kind of theory on the S corporation misconceptions, but now just going to put together just a quick checklist for you guys. So checklist for S Corp consideration. Whiteboard. Okay, so number 1, first things first, I said at the very beginning, do you have an operational, we'll say ops, business, right? This isn't going to work for that day job person. And furthermore, do you have an LLC? I think a lot of people have it messed up that, hey, I need to form an S corporation. Well, actually, you can form an LLC and then elect to be taxed as an S corporation. So start with the LLC. That gives you the flexibility to turn into an S corporation down the road in 1 year, 2 years, 5 years, whatever time it takes and the numbers make sense. Pump the brakes. Don't jump right into an S corp on day one if you think you're going to maybe make $5,000 this year. No, why don't we start with an LLC, get the asset protection, and we can always make a tax selection on the LLC to be treated as an S corp when it makes sense. So we need to have an operational business and we want to have an LLC in place. Further, when it's going to make sense, profit is consistent / predictable. But if we're going to make this decision, well, really I should also tally on here. Books are accurate. You're doing your bookkeeping, because if you look at your books for last year, you see you made 30,000 and you made 20,000 the year before. Are you projecting you're going to make 40 this year? Are you going to double this year? Triple? I don't know the numbers, but when you have the books, you have something to go off of, and you're in the day-to-day, you know what's changing, you know you're getting more customers, you're losing more customers, you're rolling out a service that you're going to charge more for, and you can do yourself a projection. Hey, have you been steady through Q1, Q2, on and on? Again, you want to have data to support your projection. And then if you can conceivably see that, hey, by the end of the year, you're watching this, you can have a projection for, hey, I think I'm going to be at about 60,000 at the end of the year. Then, okay, why don't we monitor that and get with a tax advisor sometime in Q3 or early Q4 to make this decision. But don't go to an advisor if you don't have your books. It's going to be a pointless conversation. No tax strategy can be done without accurate books, because we have no idea what your foundation is. And then once we're checking off these things, I would say talk with a tax pro and get a few opinions, because not every CPA, enrolled agent, accountant, bookkeeper, not everybody's built the same. Not everybody knows about the S corporation. I've seen too many times new clients come to us, they've been a Schedule C business for 10 years and they should have been an S corporation. And they were like, oh, my CPA never mentioned it. Yeah, because a lot of CPAs don't know tax strategy, unfortunately. They're just tax return preparers. So be careful and make sure you talk with someone who knows what they're talking about when it comes to an S corporation, and get another opinion if you have that capacity. And lastly, I'll say when it makes sense, you're proactive yourself. I said those last few things before, that, hey, we're going to have payroll costs now, and now we're going to be meeting with ideally a tax advisor on a quarterly basis to dial in our reasonable compensation, or what our W-2 amount is going to be. So you need to be on top of your books, whether it's you or someone taking care of it, but you also have to know that, hey, I got to run my payroll quarterly now. How much money do I need to have set aside for payroll taxes on that? Am I going to make any withholdings there? So take a step back, work through these items, and really see if, hey, I should advance this conversation with someone who knows about the S corporation. And then, hey, I'll even just throw out there that if you are below that, I put $50,000 as you saw we were kind of break even. We were losing $200 net in that first example on the left column. But beyond the payroll savings, you got to know that there's other strategies that you can do with the S corporation. I know I said I was just going to focus on numbers today, but I just want to let you guys know what else is out there. When you have an S corporation, you unlock the pass-through entity tax, where you can get a deduction on your federal return for state tax payments that you're paying through the S corporation, and then you get that credit at the individual level after your K1. So you get that PTE credit. Depends on the state. Some are PET, some are PTE, but pass-through entity credit. You can adopt an accountable plan, right? Also, board of advisors. These two kind of work in tandem, but a reimbursement policy that the company adopts, and hey, can pay you whether you're paying for something personally, but it's got some business use tied to it. It's also going to be how we're deducting our home office, our auto, and our travel. And hey, we can establish a board of advisors for the business. We're putting kids on there. We're putting close family friends, confidants, people we trust. I mean, the list goes on. I mean, I'll try and keep this short. Self-rentals we could do with an S corporation. Or, oh my God, I'm the only employee. I want to do a solo 401k. Or, hey, I want to implement an HRA and get some benefit from writing off my own medical. Like, all of these strategies, some can be applicable in a sole proprietorship, but they just become much cleaner and easier to use through an S corporation because it's a separate tax return. It's not on your individual now. So it looks good from an IRS standpoint. You're less likely to be audited on an S corporation. So if we're rolling out strategies such as these, it's going to be much easier, cleaner for you on a documentation standpoint to implement moving forward. So maybe you do the numbers and you're just right at that $50,000 and you're thinking, I'm kind of going to break even at the end of the day on the payroll savings. But what about all the benefits from these incredible strategies, which beyond the scope of this video, just want to let you know that, hey, I couldn't possibly cover everything to do with an S corporation here today. That'll be on the horizon if you subscribe to this channel and stay up to date with us. And if you're working through those homework items that I listed up before and you want to know if that S Corporation is going to work for you, please get in touch with us, get over to our website and book a call. We have several S Corporation clients whom we're talking with on a monthly basis, texting, emailing, hopping on strategy calls to help them implement these strategies as well as many more for their picture and ultimately helping them pay less tax to, I don't want to say your good friend, but to old Uncle Sam down there. Don't rely on TikTok advice. Get in touch with an advisor and see if the S Corporation makes sense for you. Thanks for tuning in. We'll see you guys on the next video.